GameStop, a video game retailer, was in trouble even before the coronavirus pandemic hit, suffering hundreds of millions of dollars in losses and closing hundreds of brick-and-mortar stores as gamers increasingly made their purchases online. But none of that has stopped its stock from skyrocketing in value, spurred on by individual investors posting on the Reddit page Wall Street Bets, started by Jamie Rogozinski.
And what we're seeing here is the result of having a massive influx of retail traders who don't care about fundamentals, never really have cared about fundamentals. They've cared about these short-term moves. So in theory, the short term, anything is possible. I mean, the price is set based off of supply and demand. And at this point, anyone who's just buying up the stocks is further putting pressure to raise the price.
Institutional investors had bet against GameStop, shorting the stock to make a profit. But Reddit investors rallied against them, buying the stock en masse. This increased the price and created a so-called short squeeze, where hedge funds were forced to buy the rising stocks to avoid massive losses, further pushing up GameStop shares. After losing hundreds of millions of dollars, institutional investors like Andrew Left of Citron Research have admitted defeat and walked away. Analysts warn this is a dangerous game.
The stock gets pushed up, and unfortunately, it's a little like a Ponzi scheme, because if you're the last person holding those shares at $160 a share and you bought up there $158 and now it's trading at $88, well, you just got stuck with the last part of the trade and you lost a lot of money.
GameStop, Express, AMC Entertainment.
But many day traders appear willing to take the risk, now propping up other struggling companies like the AMC theater chain and BlackBerry, threatening Wall Street institutions and prompting calls for reform of a market increasingly seen as out of touch with Main Street. Kristen, Saloomey, Aljazeera, New York.